Hello everyone, Rahul Shah here, trying to make investing accessible and profitable for the average investor. Now, there are stocks where I feel sorry that I did not recommend to my subscribers, and then there are stocks which, even if they turn into multi-baggers, I'm okay missing out on them as they were anyways outside my circle of competence. Now, where does Reliance Power fit in? Was it within my circle of competence or well outside it when I saw its price collapse to low single digits back in 2020? Well, it doesn't matter, to be honest. What matters is its crazy rise since then. The stock, which had fallen to close to rupees 1.2 per share, is now trading at a princely rupees 60 per share. That's a gain of more than 50 times, or a 50 bagger if you will. As I said, the stock crashed close to rupees 1 per share back in 2020. Now let us go back a couple of years more to the year 2018, January 2018 to be precise. What was the price back then? Back in January 18, the stock price was exactly the same as its current price. Yes, that's right. Reliance Power stock price was rupees 60 per share back in Jan 2018. From there, it crashed to almost rupees 1 per share over the next 2.5 years. The wealth destruction of the magnitude of 98%. Almost all its market value wiped off in less than 2 years flat. But why did the stock fall so much? Why did it go down all the way to nearly zero? You see, our approach to investing is not always rational. We often become emotional when it comes to analyzing stocks. If we are positive about a stock, even a small positive development leads to a disproportionate rise in the stock price. For example, even a small positive development in defense sector can send the prices of defense stocks soaring these days. Likewise for negative news. If the market is negative about a stock, a small negative development can lead to a disproportionate fall in the stock price. Something similar happened to Reliance Power in 2019 and 20. It recorded huge losses in 2 consecutive years. In FY19 and FY20, Reliance Power incurred a loss of more than rupees 7,000 crores. Now, for a company whose net profits was close to rupees 1,000 crores, on an average, a loss of rupees 7,000 crores combined is huge. And it is primarily these losses that triggered the enormous wealth destruction in Reliance Power. Now, this was the emotional investor who got so scared with the losses that he exited the counter lock, stock and barrel. If you look at it rationally though, this looked like an overreaction to bad news. It wasn't as if the company's net worth was completely eroded due to the twin losses in FY19 and 20. Before the losses, Reliance Power's book value was close to rupees 70 per share, and after those 2 losses, it came down to around rupees 40 per share. Hence, if you value a power stock at a price to book value of 1 times, Reliance Power's price should have come down to around rupees 35 or rupees 40 per share. However, it came down to just rupees 1 per share. A stock with a book value of rupees 40 per share was trading at just rupees 1.2 per share back in 2020. Please note that not everything was terrible about the company back then. Interestingly, the company was still generating positive cash flow from operations and was steadily paying down its debt. Therefore, operationally, it was very much alive and kicking and making good cash flows. As market conditions improved and as investors realized that things don't look all that bad for the company after all, the stock price steadily started climbing up. Now, although the company still reported losses in FY22, FY23 and FY24, their magnitude was far less than before. Besides, the cash flows continued to remain strong and the overall debt continued to go down. Then came FY25 where the company reported a one-time income of rupees 4,000 crores, and this improved the company's book value substantially and brought its overall debt further down. Book value per share, which had further gone down from rupees 40 per share to rupees 30 per share, has now climbed back to rupees 40 per share thanks to the one-time profit in FY25. Of course, I am saying everything with the benefit of hindsight. But Mr. Market gave plenty of opportunities to investors who were willing to put their thinking cap on and take a calculated bet on the stock. At rupees 1 or rupees 2 per share, the risk reward was hugely in favor of the investor. However, with the price now significantly higher than the book value, I am not sure the same risk reward equation exists. In fact, its valuations now are pretty similar to a PSU behemoth like NTPC or a private sector player like CESC. Of course, the valuations are still lower than what a Tata Power or an Adani Power commands. But is Reliance Power in the same league as these private sector players? Is it completely out of the woods yet? Will it continue down the path of financial prudence? Answers to these questions are difficult, to be honest. At rupees 1 or rupees 2 per share, it was all about whether the company would survive. Figuring out the upside was not as complex as it is right now. To be honest, I prefer stocks where I don't have to answer difficult questions to make my returns. And Reliance Power is indeed posing some tough questions when it comes to the expected upside from the current levels. For this reason alone, the stock lies well outside my circle of competence. What about you though? Does it lie within your circle of competence? Do let me know. That's all from me today. I'll see you again in the next session. Goodbye and happy investing.